The third part that I would like to expose to you is about what is taxable here and what are not taxable in Indonesia. I would say that most of the incomes, whatever that triggers you to increase your wealth, it most probably will be taxable here in Indonesia. All right. Such as employment income, if you exercise your employment, you come here to work for a company, you've been hired by a country that has a business here or set up a company here, investment here, your salaries will be subject to tax, right? If you split your salaries between here and in your home country, be aware that part of the home country split salaries might also be attracted to Indonesia and be subject to Indonesian tax. The other part is you're here to retire in Indonesia. There are some issues that varies between the country and the country, whether it will be taxable for the income that you earn from the pension fund, right? But let's get to it. I'll be giving you some examples of whether there are some countries they'll be taxable, some countries they're not taxable. It is really subject to the available what is stated there in the tax treaty between Indonesia and your home country. The other part is if you are here for the business income. Of course, if you have a business income by yourself, you declare under your personal level, it will be taxed on you. But the interesting part is that you can also put away your business and put it under a separate company, which is a PMA company, then only be taxed on the PMA level and not to expose it to your personal level. The other part is that you have your extra fund where you invest it anywhere else. You can also choose to invest in Indonesia, but the capital gain is taxable. However, if you put your investment into buying a portfolio of shares in publicly available, like in Jakarta Stock Exchange, those shares will be taxable very lower at the 0.1% of whatever transacted. It's not based on your income or loss that you made. The tax is based on the transaction. So regardless whether you sell at loss or gain, you'll be taxed, and that is final. That is very straightforward. So certain things that if you put an asset into the share, where the share is non-public, the dividend that you take away from the profits, out of the profit that you had, it can be tax exempted. I'll show you later on or in other subjects, because this will be a way different stories or explanation about how dividend can be tax exempted, and I guarantee you it's not very complicated to get that exemption. All right. The other part I'll be talking to you is about that you are taxable whenever you are only a tax resident in Indonesia. Suddenly, whenever you come here, you only stay for 2 weeks or probably only 2 months. It's unlikely that you will be taxed in Indonesia. So you're still a foreigner. You're not here to stay. You will not be taxable yet, because you're not a tax resident. A tax resident is by definition of whether you plan to work and live in Indonesia from the day one, but that's on your plan, and that's only when you apply for such as like kitas or your kitab. You're getting your kitab. Those are the showing of your intention to live in Indonesia from the day one. The other part is that you don't plan to stay, but because of that accumulated interesting of your intent of your business that you commute, but then relatively over the period of 12 months, you already have spent at least 180 days here. You will also be considered as a tax resident and get yourself a tax ID in Indonesia. because you'll be taxable here. The fourth part is talking about your home country income that might be subject to Indonesia tax, right? So as I said in earlier, you'll be subject to worldwide income tax in your home country. If you leave your home, rent it out to somebody else because it's empty, right? So you come into Indonesia to live with your spouse or work here, and your rental income is unfortunately probably will be, most likely I would say, will be subject to Indonesian tax. But whatever you have paid on the rental income and be reported in your home country is going to be acknowledged in Indonesia as a tax credit. So my word of advice is, while you are here not for the long term, you probably don't do any selling of your house, because the capital gains coming from the selling of the house might be subject to Indonesian tax. Or if you want to do it, you have a one-way ticket to Indonesia and you're leaving your country for good, at least means not in terms of nationality, but then selling of your assets, do it before you come to Indonesia permanently, right? The other part is to consider to use a company or a trust, a sort of a trust to hold your assets and to receive income. That means it's applicable for those who have significant numbers of assets. Then you rely your income from the asset that you have put on portfolio and give you good yields. You can have set up a company easily in Indonesia or anywhere in your home country, and only be subject to tax at the level of your company. Before then you extract dividends from it, then it will be subject, it will make yourself avoiding being taxable at your personal level, right?